Welcome to the Futures Financial Solutions channel. If this is your first time tuning in, thanks for stopping by, and if you're a returning guest, welcome back. Today's video is our first in our insurance tutorial series. So today we will talk about life insurance and the primary difference between term and permanent. We'll first begin with a textbook definition or explanation of what life insurance is on a fundamental level. Then we'll go into detail about what each type means and the variations of each. So I encourage you to get out your notepad so that we can get started. What is life insurance? Life insurance essentially is a contract between a life insurance company and a policy owner. So essentially what this means is it's an agreement between you and this company for them to cover you for a certain amount of time that you designate is appropriate for your current needs. A life insurance policy guarantees the insurer pays a sum of money to one or more named beneficiaries when the insured person dies in exchange for premiums paid by the policyholder during their lifetime. So this essentially means that the company that you've chosen to do this contract with will pay out the designated beneficiaries that you put on the policy, whether at the beginning of the contract or the interim. The different types of life insurance: term and permanent. Term insurance can be considered a short term because it's for a designated number of years. And permanent life insurance could also be considered as long term insurance. So we'll go into a little bit more detail on the next slide here. Term life insurance is basically designated to last a certain number of years, which can be 15, 20, 30 years, and then it ends. The policy ends after those terms are complete, which can be considered, as I mentioned, short term. But permanent life insurance stays in force for the insurer's entire life unless the policyholder either stops paying the premiums or surrenders the policy, hence why it's called long term. Here are the three types of term insurance: decreasing term, convertible term, and renewable term. We'll go into detail to explain what each of these three types mean. Decreasing term life, this type of insurance is renewable. It's a renewable term life insurance with coverage decreasing over the life of the policy at a predetermined rate. So when you begin your policy contract, it will indicate in the terms of the decreasing amount over the life of the policy so that you know exactly what will happen during this particular contract. Convertible term life insurance allows the policyholders to convert a term policy to permanent, which is quite a brilliant form of term because as we move through life, things change, our needs change, and if you're buying the term policy in your early 30s or what have you, and you have a term for maybe 15 years, as that 15 years comes to a close, you can convert it. With your renewable term life insurance policy, it provides a quote for the year the policy is purchased. The premiums then will increase annually and are usually the least expensive term insurance in the beginning. And one typically chooses this type of term insurance policy because they really want to be covered, but they may not be financially ready to choose either a convertible or decreasing. Now we'll talk about permanent. There are four types: whole life, universal life, which is also called UL, index universal, which is also called IUL, and variable universal, which is also known as VUL. I'm sure you've seen those acronyms somewhere, some way, either on someone else's insurance policy that you know in their family, or you've seen it online somewhere. Now, let's first talk about whole life insurance. It's a type of permanent life insurance that accumulates a cash value in order to last the lifetime of the insured person. Cash value of this life insurance also allows for the policyholder to use the cash value for many purposes, such as a source of loans or cash or to pay policy premiums. Next is the universal life or the UL. It's a type of permanent life insurance that also gains cash value and has a cash value component that earns interest. The universal life features flexible premiums as well, and it's unlike term and whole because the premiums can be adjusted over time and designed with a level death benefit or increasing death benefit. Next is the indexed universal life or IUL. It's a type of universal life insurance that lets the policyholder earn a fixed or equity index rate or return on the cash value component. Now, this particular one is associated a bit with the market, hence why it's an indexed. I'm putting quotation marks in the air, you can't see me. And finally, the variable universal or the VUL. This insurance allows the policyholder to invest the policy's cash value in an available separate account. And it also has flexible premiums and can be designed with a level death benefit or an increasing death benefit. So there's a slight difference with the other two because meaning the other two universals. So let's just do a quick sum up or a summation of the difference between term and the permanent. This can help you determine in your current life situation what would be most applicable for your needs. Will you need something just for a few years and maybe potentially convert, or do you currently need something that will last the lifespan of your particular situation or your life. So term life insurance only lasts for a set number of period time and pays a death benefit and should the policyholder die before the term expires. Permanent stays in effect as long as the policyholder pays the premium. And another critical difference involves the premium's permanent is generally more expensive than the term because it involves a building cash value. So that is the key differences between the two. So your key takeaway is when shopping for insurance, you might want to start with the most stable insurance companies because they have to pay you out. Remember that. And so it's suggested that you recruit a professional to help you make your selection. Their services are typically usually free, so don't fear asking a professional because thinking you're having to pay money up front for their services. So I want to say thanks for watching. Again, this was our first tutorial series of our insurance, and we wanted to just give you a basic back foundation of what insurance means, the key differences between term and permanent. We encourage you to continue to tune in. We will upload videos every week. So always remember, like, share, and subscribe. And again, thanks for watching.